Jeff Bangerter here with Bangerter Financial Services with the week on Wall Street for June 21st, 2021. New messaging from the Federal Reserve on interest rates and inflation last week led to a broad retreat in stock prices. The Dow Jones Industrial Average dropped 3.45%, while the Standard & Poor's 500 lost 1.91%. The Nasdaq Composite Index slipped 0.28% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, fell 0.64%. The Federal Reserve's announcement on Wednesday that interest rate hikes may likely occur sooner than expected and that it had underestimated the pace of inflation unsettled investors. The hardest hit groups were cyclical stocks like energy, materials, and industrials, as well as financials and consumer staples. Losses accelerated into the week's close on comments by St. Louis Fed President James Bullard that the first rate hike could be as soon as 2022. The bond yield curve flattened as short-term interest rates rose in anticipation of rising rates and longer-term rate declined, reflecting a view of an eventual economic slowdown. Last week's FOMC meeting announcement took investors by surprise as the Fed indicated that 2 rate hikes in 2023 were likely. It was as recent as March that the Fed had signaled that rates would remain unchanged until 2024. The Fed also raised its inflation expectations to 3.4%, up from its March projection of 2.4%, though it continues to believe that the price increases will be transitory in nature. The Fed provided no indication of when and by how much it might be tapering its monthly bond purchase program. This is Jeff Bangerter with Bangerter Financial Services, home of the fiscal bridging formula, signing off for now.